Once we get rid of candlesticks and rely on line charts, removing all the noise, what we get is a nice, clear and clean price line chart. And what we can do is let the chart speak to us. For example, if we take a look at Ethereum here, there was clear momentum when things were good. You can see all of these areas here was the market telling us that this was an instrument that was poised to go higher as it was probing all-time highs. And as we know, blasting to all-time highs tends to be the ignition for very powerful moves. Also, we see clear support on the moving averages. We see clear resistance around the moving averages when things are poised for a pullback. We see a clear break of the trend and a reason to get out, take profits. It later turns to be resistance, and then later this turns into a buy once the market clears this range. If we take this line and extend it, what was a breakout right here would eventually become support with this double bottom support here, and again would find support here. And again, we can see if we take the highs previously, there was also a trend line breakout there. So let me clear that. This trend line breakout also gave us the same line where the market would come and use this for support. And here we can see clear evidence of clearing this area here. This trend line breakout was another reason to enter based on this trend line breakout after seeing support on this line here, the previous breakout level. So there was a lot of indication that momentum was pushing things to the upside. This breakout, of course, led to this nice move higher. Remember, there's so much information on this chart. I'm just showing you what a summary could look like. Here we have a breakdown before the pullback. We come back and try and take out that area. So we're talking about this area here. Notice how it turns into a resistance area for a pullback down. We come back and take it out and have this move higher. Interestingly enough, if we extend that same line, you see how the market used it here and then turned into resistance right there. Taking a look at the moving averages, we can see the last time we were above 4,000, there was rejection around the 50-day moving average, and recently here at around 3,500 as of April, there was uniform activity rejection again around the 200-day moving average. The recent slide in the cryptos is consistent with their trendline breaks. As we can see, there have been lots of trendline breaks and now on a free fall. And the question becomes, are they going back to test this breakout as of late 2020 at about 750 or potentially even lower under 500? Based on the breakouts that took place in late 2020, that's the huge question in the minds of traders if you remove all the data from candlesticks. Looking at the S&P 500 on the daily, we can see that this failed breakout was a clear sign that the market was poised to pull back, even though at that time you wouldn't know that it was going to be a big sell-off, but at least this failed breakout was indication that the momentum had run out. If we ignore all the market noise, once the market clears this trend line right there as of April of 2020, the indication from the market was that there was a possibility of prices moving higher, and that's exactly what we got. If we take this breakout that failed and extend it out, should be something like that. We get a couple interesting points. We get a breakout here that would eventually turn into support, as we can see here. By the way, if we go by the chart, let me propose another way of looking at that period, which is take this breakout from a trend line breakout right there. Now we can see that if we take that breakout and draw a line from there, we clearly see that the market was aware of this breakout right there as the support held before we get another clear breakout that we can see for the most part was very successful with a retest, and of course we would go higher. At the highs, this breakout failed, and once it failed, the market was sending a message that there was no momentum and the possibility of lower prices was now on the table. On its way to this big drop for the S&P 500, the market has been giving clear signals. Here we broke the trend line. We broke the trend line recently here, and then again we could not reclaim that line right there. Double rejection. Here we broke the trend line again and we were rejected here. Looks like a triple top. So the market has been giving us lots of clues on its way down. What we see here is that in as much as traders love candlesticks and OHLC price charts, they do bring some level of noise. It does make sense to also incorporate simple line charts, which in theory reduce 75% of the noise by completely removing the opening price, the week high and the week low data points, as they can muddy the picture.